Right now, I don't think we're nervous necessarily, but more reflective of the fact that we have had a really strong start to 2019 and honest with ourselves about how this pace of gains probably can't continue through the rest of the year. So I don't think it's necessarily nerves, but we're certainly tempering our expectations for how the rest of the year is going to go.
Does that mean you're selling stock and raising cash? What does tempering expectations mean?
Not necessarily reducing our allocation to equities, but simply resetting our expectations in terms of gains from here. When the market's up, according to the S&P, almost 17% year to date, it's very hard to maintain that pace. That would be a 50, 60%.
Well, that would be
yeah.
That would be the greatest year in the history of the American stock market if these paces continue.
If these paces continue, it would be incredible. And I think when we see earnings news come out throughout the season as it begins at the end of this week, we'll probably see a little bit more mixed bag in terms of company earnings. And I think in that kind of market, you may see some sideways motion, at least for the near term.
All right. So no change in your investment strategy. Is there a change in any kind of equities that you are recommending to clients?
Well, we're still more optimistic on the opportunity set outside of the United States at this point in the cycle. And I think that's reflective of both the U.S. Gains that we've seen so far, higher valuations, but also some of the better growth opportunities we're seeing, particularly in emerging market equities right now. We're optimistic about a reacceleration in China, particularly. We're starting to see better news, better PMIs, better data flow coming out of there, along with optimism building around a U.S.-China trade deal. So that's probably our better.
Well, Tim, you just talked about how good this market has done. The Chinese market is up twice as much as us.
Right.
Sounds like you've benefited from that.
Certainly.
And are you holding on?
I think so. When we look at where their opportunity set is more broadly, yes, the Chinese market's done well, but if you look at, for instance, headline valuations on emerging market equities, according to the MSCI Emerging Market Index, it's not richly valued or overvalued by any metric, and actually looks at a relative discount to the U.S.
You know, we've got this proposed threat, we'll get to more in just a minute, on President Trump, new $11 billion in tariffs with Europe. Does that change your thinking at all, change your calculus at all?
Well, I think this is still early stages for this European tariff issue, one that we've heard rumblings about for the last few months as sort of the next set of trade issues that the Trump administration would like to take on. I think it'll be very hard to really fight two trade wars at once. I think the administration would like to wrap up this China negotiation soon. Would European tariffs affect our outlook at all? I think that it could temper our outlook if it gets to the advanced stages, but right now it seems more like a negotiating tactic.
All right.